they've tended to commoditize personal insurance. And they're coming very soon to commercial insurance. Companies like Tamika already have comparative rating systems out in the marketplace. We're hearing a lot about the importance of gathering data and using data to make data-informed decisions. It's this new buzzword in the industry. Like we've never been concerned with data before, right? I mean, that's crazy. We are looking at loss ratios all of the time. We look at all kinds of data. Our business is driven by data. The importance of really doing a good job in agencies is changing with data and data-driven decision-making, because we're going to see commission cuts and other revenue reductions over the next few years in our business, inevitably. And increased competition, not only from online sellers and others, but many people trying to get into our business. So it's going to be very important to manage business very effectively. You know, in a Fortune 500 company, they rely on data, and if the data isn't well analyzed, they don't make any decisions. In smaller businesses like insurance agencies, typically owners make decisions based on hunch, gut instinct. Increasingly, though, successful operators of insurance agencies are going to have to do more data analysis in order to make better decisions, because the consequences of those decisions is going to become more important. We don't want to become like middle market or Fortune 500 technocrats, but we do want to use data to inform and modify and make better those hunches upon which we make business decisions. The use of data and the use of KPIs and more rigorous management increases the larger that the insurance agency gets, certainly above the $1 million of revenue. Having a thorough analysis of its operations using KPIs becomes much more important. The reason is the cost of making mistakes goes way up, and it's harder and harder to sustain a growth rate of any size the bigger the revenue in the agency gets. And so as you grow your business, just know you're going to have to become more rigorous in your analytical skills, either you or someone on your team. What we need to focus on now is what it costs us to write a policy. What does it cost us to service a policy? And the knowledge of those numbers should help us make decisions about who we're going to insure, what markets we're going to go after, and whether or not we're writing business in the agency that's appropriate. You know, the average insurance agency only sells 1.6 policies per customer. That's crazy when you think about the number of policies that any client, whether it's a commercial client or a personal client, actually buys. We can't afford to have that low level of production at the high service costs that agencies are being asked to bear today into the future. If commission rates continue to decline, and every thing I read tells me that over the next 5 years that's going to happen, the lack of proper profitability that some agencies now have is going to become very serious. So data, its analysis, and its understanding become increasingly important to you in your agency. Knowing your cost of producing small commercial insurance is going to become increasingly important. You need to decide whether you can make enough money on that business. Can you make it up on volume, or should you focus on something else? As technology continues to be used increasingly in our industry, not only to sell insurance but also to service it, you're going to need to make important decisions about the kinds of policies, the kinds of clients that you want to work with. Data is your friend, and its analysis will give you the answers. You know, there's so much more to talk about on this topic. I've talked about many of these subjects in more detail in my new book, The Future of Insurance is Data Driven. I hope you'll download it and take a look.